I'm going to show you how to simplify Bollinger Bands to grow your small account. What you are seeing in front is how Bollinger Band looks like. It consists of two outer lines and a middle line. To remember this, think about it like bowling alley. Bollinger Band, easy. The middle line is just a simple 20 period moving average. The upper line is plotted 2 standard deviation above the 20 MA. The bottom line is plotted 2 standard deviation below the middle line. Just look at this histogram. View the +2 standard deviation as the positive axis and -2 standard deviation as the negative axis. This creates a distance from the zero or middle line to the left and right. This explains why the upper and bottom line of the band is away from the middle line. So, if we want to broaden the bands, we tune the standard deviation from 2 to 3 and 2 to 1 if we want to get a narrow band. The tunings are unimportant for now. We will come back to it later. So, you just need to know that these two lines are also known as upper and lower band. After learning all this boring stuff, let's learn how to apply the Bollinger Bands. When the price is consolidating or in a crab market, the bands are tight and narrow. When the price is trending or fast, the bands will broaden up. If the price comes near or out of the upper band, the price is overbought and it might reverse and drops down. Similarly, if the price is near or out of the lower band, the price is oversold and it can anticipate the price to go up. However, this is not always the case. In a strong downtrend, the price stays outside of the lower band for several candles. Similarly, in a strong uptrend, the price can stay outside the upper band for several candles. So, back to the previous histogram knowledge, what happens when we tune the standard deviations? I tuned the standard deviation from 2 to 3 and 4. This widens up the lower and upper band. The tuning decreases the frequency of failures by having less candles staying outside both bands. The Bollinger Bands can also help you to identify your stop loss and take profit level. Let's look into some examples. If you place a buy order at the crossover of the middle band, which is the 20 period moving average, you will profit target at the upper band. In contrast, if you sell at the crossover of the middle band, you can take profit at the lower band. Now that you have understood the basics of BB, it is time for me to show you a super easy consistent profit method, which is called the squeeze breakout strategy. This method is based on the concept that the price moves from a crab market to a trending market. Hence, if we spot a ranging environment, we can expect the market to impulsively move to either the upside or the downside, or continue to move like a crab or consolidation. However, our goal of this goal is to join these big moves to make huge gains. Step 1 is to find low volatility areas. Here's how a ranging area looks like. First, the middle band is as flat as horizontal line. Second, the bands are extremely light and narrow, just like a bowling alley. These two features tell us that the price is compressed to very low volatility. Step 2 is to mark your static support and resistance levels. There are a lot of false signals when you are trading the default settings of this strategy. And what are the ways to minimize the false signals? First, change the moving average period from 20 to 50. Although using 50 period moving average will get lesser signals, but the quality is higher. For standard deviation, use default settings of 2. After tuning the settings, draw the static support and resistance levels. We will buy when the price breaks through the resistance and closes above the upper band. Similarly, we will sell when the price breaks below the support and closes below the lower band. Very important to note that the price must wait for the candles to close out of the bands before entering the trades to prevent false signals. In this example, the price had broke above the static resistance and close above the upper band. So, we will enter a buy position with the stop loss below the previous candle low and place the take profit when the candle closes red inside the band or 1:2 risk reward. Look, and the trade just played out magically.
Wow!
Here's another example. Remember, step 1 is to find a crab area and here is the ranging area. Because the middle band is flat and the bands are narrow, next step is to identify your static support and resistance. When the price closes below the support, don't rush into the trades. Remember, you must wait for the candles to close below the lower band like this. I will enter the sell position here and place the stop loss above the previous candle high and place the profit target when the candle closes green back into the band or twice my stop loss. Once again, you can observe that the trade just magically hit our profit target. Make sure you backtest this strategy and make some improvements or adjustments before using it in your live account. Thank you for your time. If you find the content useful, please like and subscribe for the YouTube algorithm to promote it to more people. If you want to learn more about scalping, do check out the playlist and the video. Signing off.